All right. Hello, everyone. Welcome back to SMC Simplified. So, I want to show you how you can make an entry using my type A liquidity from 4 hours time frame. So, I've done the analysis because I don't want this video to be too long. And if you've not seen how I analyze the market, the video is on this channel. Kindly look for market structure, break of structure, like the first 3 videos that I dropped. All right, so you will understand all this analysis, that you can see on my chart at the moment. So let me start from here. You must have seen, if you have seen my previous videos, that my entries is from 15-minute time frame, but you can actually enter on 4 hours time frame. So now we have minor break of structure here. We have another minor break of structure here. We have another minor break of structure here. So when price started pushing to the downside to take out this low, right, we'll start looking for change of character. All these movements here are internal structures. Okay, they are internal structures. Okay, so the market is pushing down using internal structure model. You can see high, low, high, low, high, low. Okay, we don't have to predict that the price is going to change from here or here or here. All right, we'll just pay attention to what price is doing here and wait for when we are going to have a market shift, change of character. All right, so while we are waiting, this low was taken out, and this low was taken out, and this low was taken out. Okay, and then what do we have? We have a high, we have a low. Okay, and when that happens, we have price, look at it, we have price close above this high. So our change of character is now confirmed. Our change of character is now confirmed here. Okay, then the next thing is to look for the last order flow that caused this change of character. This is the last order flow, this is it here, and that is where our entry will be. All right, and our entry will be long. That's here. Our entry will be here, but let me put it here because of this video, but this is where the entry will be. So I'm just shifting it, I'm not changing the entry, so that when I'm putting the profit and loss, this thing, it will be easy. So this is where the entry will be. Okay, so I'm just shifting it to this place. All right, then the stop loss will be below, let me be sure, yes, so the stop loss will be below this order flow. Okay, and then our TP remains the same, 1:5. Very simple, you can see that. Or you can have 2 entries, and the second entry will be above or around this level here on this high. That is if your 1:5 is not up to this high, but our 1:5 is even above this high. You can see that price broke above it. Okay, so that is one. You can see here also we have minor break of structure, and when price takes this out, we are going to have the expectation that a major break of structure is going to print. Okay, because of that, I will begin to pay attention to the model that the market is using to push to the downside, which is, as you can see, high, low, high, low, high, low, high, low. And when this high was taken out, this is our last order flow here. Can you see when this high was taken out? This is our last order flow, and that was where the entry started from. Okay, our entry was on this order flow. You can see the order flow. It was there, stop loss just below, and then 1:5 completed. Okay, very, very simple. That's how to do it. So here we have minor, right? So anytime we have minor break of structure, right, I always expect that price, or anytime I have a break of structure, which I see as an ordinary break of structure, and I see price, trying to come to the downside, I'll begin to pay attention. So when price takes this level out, I don't mark it as change of character. All right, I mark it as sweep of liquidity. Then I will change this one from ordinary break of structure to minor break of structure, because I will not be expecting price to take out this high to now make my major break of structure. Okay, so I will look for the pattern of the market. You understand? Now you can see I'm not going to take an entry here for a buy because this low has not been taken out. So whatever buy I want to make, it must be below this low, or this low must be taken out first. And as we can see, we have a low here, we have a high, a low, right? And then what happens? We have this change of character here after this low has been taken out. You understand? Confirming that there's possibility of this high to be taken out. Do you get the concept? Some people will be looking at selling because this will be their change of character. But for me, it's not my change of character, it's my sweep of liquidity, because I'm still looking for market to take out this high. My change of character happens when this low has been taken out. That's the low that caused the major break of structure. Okay, so now this is where my change of character happens. Can you see that? The last order flow that caused this change of character, this is it. This is a candle here. Do you see that? So my entry will be where? Excuse me. My entry will be at the beginning of that order flow. Okay, that's a buy. So my entry will be here, and then because this order flow, right, has a long body and has a long wick, very long, and a short body, my SL will be wide because of situation like this, because there is not really much resistance, okay, to push the price upward at that point. So I'll be generous with my stop loss. So the concept you can use, which I explained in the previous video, is to use the low here. But for that video, it was an high that I used for the example because we were buying. Okay. So for this one, is going to be no, for that one we were selling, so we used the high. So for this one we are buying, we are using the low here as the SL. So you can see just a little bit above it, just a little bit above this low. Okay, and then same thing, 1:5, 1:5, 1:5. Can you see 1:5? Then TP smashed. Okay, so that means if you risk 5k here, you make 25. If you risk 10, you make 50. All right, so that is it. All right, very, very simple. I applied the same model here as well. When I see, so all these ones are internal movement, right, to take out this high. Okay, so the same model was applied here. You can see. So is either you use fractal confirmation or you enter directly from 4 hours time frame, right? But I prefer fractal confirmation because my TP will be hit faster than if I enter from 4 hours, and it's still going to be the same profit because it is the same risk to reward ratio 1:5, 1:5. All right, so you can see it was taken out, and then for here too, when this was taken out, okay, let's check it. When this two was taken out, right, you can actually make an entry because this is your price came down. If it is not visible on 4 hours time frame, all right, but this is high, this is a low, so this is like a sweep. All right, in my previous video I explained where I make entries, and one of the places is when a sweep happen in the market. So if we tag this as our change of character, that's if you want to enter from a 4 hours time frame, you mark this as a change of character. This will be your entry here. All right, although price didn't tap it, but if you go to 15-minute time frame and you use fractal confirmation, you are definitely going to get an entry here to the upside. All right, so that is how you can make use of my entry strategy on 4 hours time frame. So it applies to both Euro USD that we just use as an example, GBP USD, gold, and the likes. So thank you guys. God bless.